What's going on, guys? Marco Trades here. Today we are going to go over the day of Thursday and Friday. So it's the weekend right now. I just wanted to back test last week trading because somehow my setup formed on Thursday and Friday, but I lost money on both of these days. So I just want to see where I went wrong, and so I can go stronger and I can do better next week during CPI and PPI week. Even though I'm not going to trade CPI and PPI, but let's just get straight into it. So for my model, this is a screenshot, by the way. It's not live charts or anything. It's just a screenshot with some annotations that I'm going to go over. So for my model, you want to put the two opening prices: midnight open, 8:30 open. You want to select some targets. So in this case, we had some London lows here, and that's it. And you have the macro on the chart here. So since midnight, we had a market protraction higher, which meant the price just traded higher and higher and higher, leaving some relative lows below the price. So at 9:30, we were actually in a deep premium because we were above both opening prices. We expanded higher, sweeping the minor buy side liquidity, and expanded lower straight out the gate. And I basically wasn't ready for that. On Thursday, we really went straight into it. The price swept some buy side. We were in a deep premium, formed two big bearish fair value gap that acted as breakaway gap because we never retraced into it. Then we had a sideways consolidation, bearish shoulder block, tapped that, expanded lower into the London lows at the macro time. So this was the model, right? I was just not prepared for all possibilities, and every setup have the same criterias, but every setup are going to be different and then are not going to look the same. That's why I was just not prepared, and I feel like that day I was just not locked in enough, and I just missed the trade, right? So what happened? Why did I lose money? I lost money because after the move passed, I could see the setup that I missed, and it was really obvious afterwards. So I basically reverse traded on some low quality setup that was not even my model. Instead of admitting to myself that I missed the setup, I missed the opportunity for the day, and I should have walked away. So I didn't walk away, and I entered after the move passed on some low probability setups, low quality setups. So let's go on Top Step and see some executions. So we are on Top Step. As you can see, there is the relative lows from London here. There is the expansion lower, and there's all of my executions. So you can see the first trade was well after the move passed. The move is already done at this point. I entered here, the move already passed. The move is already behind, but I still decided to enter because I just couldn't walk away. It was just straight psychology stuff right here, guys. And then took a long here on some low quality setups that was not even my setup side. I don't even know what I was doing. So it's basically straight psychology. If I'm not able to walk away after I miss a setup, then it's going to be bad. Then it's going to lead to blown account and bigger losses, right? So for next week, I really want to focus on, okay, if a setup appears and I miss it, that's fine. I should walk away. That's how I am going to get better as a trader, and just walking away whenever the setup already is behind us, and that's okay, right? I'm never going to be perfect. At the end of the day, I'm human, and it happens to the best of us. So I should keep my head up and really just focus on walking away and not listening to my mind, my ego, these little voices that tells you, oh man, you missed the setup. We need to enter another one. We need to make money today. We can't go home without money. No, no, no. Can't be like that. So let's go over the day of Friday now. So we are looking at the day of Friday now. As you can see, we are pretty zoomed in into the chart. So let's just go locate where is the midnight open right here, 8:30 open right there, and the opening bell is on that bullish candle right here, and we have some London highs. So 9:30 we open, traded higher, swept some minor buy side, same thing as last time, but this time we traded lower into a deep discount beneath both opening prices and sweeping some sell side. Notice how we fell short of reaching the London highs here. We expanded higher, but we didn't reach the London highs. So now this high is relatively equal with the London highs, right? We're really close to it, and the midnight open is really near also. So a reversal happened, Terra sub long here, higher displacement, and then we just kind of retraced lower, never reaching this 1 minute buy side imbalance, sell side efficiency. This 1 minute fair value gap acted as a breakaway gap, and This is the first presented fair value gap that is just not on the chart. This CB here is the first presented fair value gap. So as you can see, we just retrace into this, and my stop loss was too tight, but let's go over that after. So this was supposed to be the right entry. As you can see, this was a 2-minute institutional order for entry drill. This is obviously wrong. It's like I typed it kind of weird, but this is an institutional order for entry drill on the 2-minute chart. We are on the 1-minute chart. Like I said, it's a screenshot. I can't go on the 2-minute chart, but on the 2-minute chart, you're going to see that it is an institutional order for entry drill, which means the price trade lower and expand just a bit into the 2-minute BISI, 2-minute fair value gap, and then rally higher straight after that. The stop loss was at the consequent encroachment, which is the midpoint of that bullish fair value gap here. And why this stop loss would have been a great stop loss? Because after seeing all of that happen, sweeping some sell side in a deep discount and having a premium target inside the macro, seeing this bullish displacement here and seeing this bullish fair value gap stay open is a great sign that it is going to be and stay heavy to the upside. So that's why having the stop loss at the consequent encroachment is a great stop loss, because it's safe to assume that the price is going to stay and remain heavy to the upside to reach the target, and that's what it did. However, that day I didn't do this. That day I entered on the first presented fair value gap around here. I forgot the exact order, but I entered in here and my stop loss was actually too tight. I believe it was like maybe below the slow or some nonsense stop loss basically, guys. And this is only because I already traded this move lower 5 minutes after the opening bell, because this was a day without any news release, so I wanted to just use the volatility of the 9:30 open to my advantage. So I basically took a short inside this bullish fair value gap that acted as inversion fair value gap, took a short here inside this bearish order block, many confidences targeting sell side, clean trade. It went to my target in about 2, 3, 4 minutes, 40 handles. And then this trade happened, which was actually my model. That's what I wanted to see first, but I guess I just took the setup first, right? So when I entered on the setup, I did not want to lose the money that I made on the first trade. So I basically didn't accept the risk of the second trade here. So this brought me to put my stop loss closer, and it just got stopped out prematurely every time. So I entered here, got stopped out prematurely. Entered again maybe here, I got stopped out prematurely again, and it went to my favor. It made me crash out. It made me go on tilt a little bit, but I was up $360 for the day, and I ended up minus $100 because of greed. Because I could have just easily walked away with this first trade, 40 handle trade, but I decided to trade it again. So greed, over trading, and bad stop loss placement basically killed my profit on Friday. So now let's go over some top step executions. Okay, so as you can see, the first trade here, clean trade. I went short 5 micro contract, got out under the sell side, clean trade. And then second trade, entered here, got stopped out prematurely. Entered again, got stopped out prematurely. Entered again, got stopped out prematurely. Then the move was already behind and I still went long and got stopped out. So if you look at the day of Friday, we started the day $267 with the first trade, ended up minus $108 because of all these nonsense trades. You know, all of this, it's not nonsense trade, these were actually my setup, but it was just bad stop loss placement, guys, and greed and over trading. All of this could have definitely been avoided, and definitely with more focus and more awareness of what happened in the moment, I could have easily made more money. But we're not here to dwell on the past losses, we're here to learn, and that's what we're going to do. So we're going to come back better for next week, more sharp and more locked in and ready to go. So thank you for watching, guys. I wish you good luck for next week and be safe. Peace.